Individuals who are interested in gaining early access to their tax refunds may find that advanced tax payments are a convenient choice. Finding out that your request for a tax advance has been rejected, on the other hand, can be a very frustrating experience. In this video, we will discuss some of the most typical reasons why tax advances are disallowed, as well as the appropriate actions that you can take to address the problem. Reasons for tax advance denial. Incomplete or inaccurate information. The application for a tax advance may be denied for a number of reasons, one of the most prevalent of which is whether the information provided is erroneous or insufficient. There is a possibility that this includes mistakes in personal information, income information, or the status of filing taxes. Double-checking all of the information that you supply is absolutely necessary in order to guarantee that it is accurate and comprehensive. Insufficient income. The amount of your anticipated tax refund, which is in turn determined by your income for the year, is frequently used as the basis for tax advances. Your application for a tax advance can be rejected by the lender if your income is too low, or if you have significant deductions or credits that lower the amount of money you'll receive back from the government. Before you submit an application for a loan, you should check that your income is sufficient to meet the minimal standards that have been established by the lender. Outstanding tax debts. It is possible that your application for a tax advance will be rejected if you have outstanding debts to the government, such as school loans or child support payments, or if you owe past taxes. Before granting you a loan advance, lenders will normally investigate your tax and financial history, and if you have any outstanding obligations, this may be a cause for concern. Poor credit history. When it comes to determining whether or not you are eligible for a tax advance, your credit history is a crucial factor. The possibility exists that lenders will consider you to be a high-risk borrower and hence reject your application if you have a history of defaults, late payments, or bankruptcy. In order to improve your chances of being approved, it is important to keep your credit score in good standing by paying your bills on time and managing your debt in a responsible manner. Suspicious activity. Lenders have mechanisms in place to identify any possible instances of fraudulent conduct or questionable behavior. It is possible that your application will be rejected if it contains any red flags, such as anomalies in your financial details or attempts to alter the amount of your return. When filling out your application, if you want to avoid suspicion, be honest and upfront. Steps to take if your tax advance is denied. Review the rejection notice. Your application for a tax advance will normally be declined, and the lender will provide an explanation as to why the application was denied. Give the notice of rejection a comprehensive read in order to comprehend the reasons for the rejection of your application. Correct errors. Take the necessary actions to rectify any errors or inaccuracies that may have been present in your application that led to the refusal. Make any necessary corrections to the information that is erroneous and give any additional paperwork that the lender may need. Take steps to improve your financial condition if the denial was due to financial grounds, such as low income or outstanding debts. You should take steps to improve your financial condition. Your income should be increased if at all possible. Any outstanding obligations should be paid off, and you should work on improving your credit score. Consider alternatives. Alternative options, such as installment loans, personal loans, or borrowing from friends or family, should be considered in the event that you are unable to address the grounds for the decision, or if you require access to funds in an urgent manner. On the other hand, you should be wary of the high interest rates and costs that are linked with these choices. The experience of having a request for a tax advance denied can be disheartening. However, it is critical to gain an understanding of the reasons for the refusal and to take measures to resolve those issues. It is possible to increase your chances of being approved for a tax advance in the future by ensuring that your application is accurate, having a stable financial status, and being upfront with lenders. In the event that nothing else works, you should investigate other possibilities for gaining access to finances while you focus on improving your current financial circumstances.